Fab. Okay, well, I think I will crack on with the intros and then people can continue to filter in. Yes, so hello everybody. My name is Charlotte Lush and I am the Senior Research Manager at the WDI and I will be moderating today's session. I've been leading the WDI's work on the reporting landscape. I've completed a secondment with EFRAG to help develop the ESRS own workforce standards, and I'm currently leading a project focused on international sustainability standards at the ISSB. So hopefully I can helpfully shepherd us through what can be both a fascinating but also quite dense topic. So to just briefly take you through the agenda through today. So after this introduction, I'm going to quickly take you through an overview of the reporting landscape to just sort of set the scene and provide some context for the discussion. Following this, we will move on to a panel discussion with our excellent speakers who will be providing their insights into the reporting landscape, where we're at now, and also what the future looks like. We will then have some time for questions at the end. So if you do have any questions, please send them in using the Q&A function throughout the session, and we will address them at that point. I think that the session potentially won't take the full hour unless we're inundated with questions, which obviously is never a bad thing. But just to sort of flag that to you. So now on to looking at the reporting landscape. So for anyone who has been following corporate sustainability disclosures over the last few years, you will know that there has been an absolute proliferation in the number of initiatives and corresponding requests for companies to provide data. Some of these initiatives have a very specific focus, such as the WDI, whereas others are much broader, such as GRI. And from this alphabet soup of disclosure framework acronyms, a clear demand has emerged for standardized reporting that will lead to consistent, comparable, and useful information, both for investors and for other stakeholders as well. And as a result, a number of mandatory reporting initiatives have emerged across the world. At the moment, the most topical of these is the IFRS Foundation's International Sustainability Standards Board, or ISSB, which is, as we speak, in the process of developing sustainability reporting standards. So the ISSB was created as part of the IFRS Foundation to address fragmentation and inconsistency in the global sustainability reporting landscape. It's developing reporting standards with the aim of creating a high-quality, comprehensive global baseline of sustainability disclosures focused on the needs of investors and financial markets. Once the ISSB has set standards, it's then for individual jurisdictions to make reporting against them mandatory. So far, the G7, the G20, IOSCO, the Financial Stability Board, African finance ministers, and the central bank governors from more than 40 jurisdictions have all signalled their support for the ISSB standards. So that definitely suggests that adoption will be widespread and they're really welcomed sort of across the world. The introduction of the ISSB standards, and particularly when they're made mandatory by national regulators, will have a significant impact on the sustainability reporting landscape. So the biggest of these will be the increase in the number of companies making information available. So introducing ISSB standards in jurisdictions with no or limited mandatory reporting can lead to thousands more companies publishing data. Unsurprisingly, this will also lead to more data as well. So as well as new companies publishing data, even for companies that already do some sustainability reporting, many will report more under the ISSB framework than they currently do. Lastly, a standard that is applied globally, particularly when designed to be complementary to existing standards, such as the EU's Corporate Sustainability Reporting Directive, will allow for much more consistent and comparable data. And this obviously has significant benefits in terms of usability for investors. So far, the ISSB has finalised two standards, S1, the general requirements, and S2, the climate standard, both of which are ratified in May this year. The general requirement standard sets out the overall requirements for an entity to disclose sustainability-related information about all its significant sustainability-related risks and opportunities, and it acts as an overarching standard for the full set of ISSB reporting requirements. The climate standard builds upon the recommendations of the TCFD. It's the first in a series of topical standards that will provide subject-specific disclosure requirements and will eventually cover the full range of sustainability issues. These topical standards incorporate industry-based disclosures derived from the SASB standards, which companies report on based on the industry they're in. The effective date for these standards is January 2024, with scope for the non-climate focused elements of IFRS S1 to be pushed back a year. So as I mentioned, and I just think will be clear from what we've discussed already, the sustainability reporting landscape is diverse and it is complex. So the ISSB itself is the amalgamation of many leading investor-focused sustainability and integrated reporting organisations, which contribute in various ways to its work. So the Climate Disclosure Standards Board and the Value Reporting Foundation, made up of the Integrated Reporting Foundation and the SASB standards, were fully consolidated into the IFRS Foundation in 2022. Both the Task Force on Climate-Related Financial Disclosures, so TCFD, and the World Economic Forum fully supported the creation of the ISSB. And the ISSB also works closely with the GRI, the leading provider of sustainability standards aimed at broader stakeholders, as well as EFRAG, which is leading the development of sustainability standards at the EU. So globally, there are 3 key regulatory initiatives taking place related to sustainability reporting that all interrelate to each other. So in Europe, there is the, as I've already mentioned, the Corporate Sustainability Reporting Directive and the accompanying European Sustainability Reporting Standards. In the USA, the SEC is currently developing disclosure rules on both climate and on human capital. And then the ISSB is also developing standards which will apply in any country that chooses to adopt them. So given that the motivation for regulating sustainability disclosure was to consolidate and simplify the landscape, and the global nature of companies means that many organizations will likely have to disclose against multiple standards. And there is a strong desire for these various initiatives to be able to operate together. So the ISSB has been explicit in its desire to act as a global baseline, so providing the foundational disclosure requirements that other jurisdictions and initiatives can build upon. The EU and the ISSB have announced a commitment to ensuring interoperability between both of their standards. In practice, this would mean that where there are overlaps in the EU and the ISSB standards, disclosure alignments would be aligned sufficiently such that applying one standard would satisfy the other. There has been less explicit comment with regards to alignments from the SEC. However, the SEC's draft climate rules were based on TCFD, which is the case with both the EU and the ISSB's climate standards. So there will likely be a strong degree of alignment, at least on climate disclosures. So hopefully that was some helpful contextual information that can set the scene as we now move into our panel discussion. So we are joined by an excellent panel today, each with really unique and interesting perspectives on the reporting landscape. So today we're joined by Clémence Chatelin, Manager ESG Integration at CCLA, Aakash Kapur, Chief Operating Officer at Nossa Data, and finally Rosie Mackenzie, Senior Company Engagement Manager at the WDI. So to start with, I will hand over to Clémence. So as an investor, you are uniquely positioned when it comes to reporting, as you both use corporate reporting and you report yourself. What is your organisation doing in the field of reporting?
So unfortunately, in reporting, there's little social reporting that we can do across our equity portfolio because not all companies who invest in report consistent metrics about their workforce. That is unfortunately the baseline we're at. And a lot of data that companies do report are policy-based, but policy doesn't mean that you're actually fixing anything on the ground. A good example would be the sexual harassment policies that Unilever has, and yet on the BBC you had the Kenyan tea plantation issues, where women were sexually harassed by their bosses on a regular basis. And also when it comes to diversity metrics, they aren't reported in the same way across the board. So you'll have differences in the US and the UK, for example. I think in the UK, sometimes there's even less data available from data providers. So this leads us to have a less detailed workforce related reporting overall when it comes to our reports in our portfolios. And especially because many of these companies we invest are in the US, where reporting to the workforce disclosure initiative, for example, is a lot less common. So overall, we do support more in detail corporate reporting, obviously, specifically when it comes to the topic of modern slavery, where there may be a lot of corporate policies, especially with the Modern Slavery Act in the UK, but knowing the magnitude of the problem, we also know that there is little on-the-ground data, because modern slavery is often found very, very, very deep in the supply chain, where it's very difficult to actually understand what's going on and where it's going on. And unless the company is actually really seeking to go and find it, they can just live, in blissful ignorance. So in terms of legislation, I think we are very much welcoming the new IFRS S1 S2 standards. However, they're not perfect. They focus too much on single materiality, and they are absent of double materiality, never mind dynamic materiality. So single materiality is sort of how to say, modern slavery affecting me as a business. Double materiality would be, what am I, how is modern slavery affecting my business, but how am I as a business affecting modern slavery? And dynamic materiality is, okay, it might not be a problem now, but it might be a problem later at a future point. And so a further downside of the ISSB standards is that is that they are, for example, only based on TCFD when it comes to climate. And I've just done a lot of work on our climate report. It is incredibly people-free. There's nothing about people and humans in TCFD whatsoever. So unfortunately, that's one of the downsides when it comes to these new standards. Are actually very, very helpful, as you just said.
Thank you so much, Clémence. Yeah, I think you hit on a number of real challenges in the reporting landscape, particularly that issue around consistency, but also being able to gather meaningful data on what can be significant issues when you've got sort of imperfect and diverging frameworks. I think it makes perfect sense now to hand over to Rosie, given that WDI is trying to address some of the issues that you mentioned. So Rosie, what is WDI doing in the field of reporting?
Thanks, Charlotte. Yeah, I mean, it won't surprise anyone that we're trying to improve the quantity and quality of corporate workforce data, the amount of volume and quality that companies are putting out there. For anyone not on the line, it's who's not familiar with it, is via an annual survey, and Aakash's team help support that with the technology. And really try to be that liaison between investors and companies as much as we possibly can be. I think there's a big sort of learning curve that we have to help companies go through, that any data at this stage is useful. It doesn't have to be perfect. They just have to be willing to put it out there so that they can be benchmarked, so that investors have access to it, and so that everyone can sort of learn from each other. And that's definitely true of the investors as well. Lots of our signatories are on a steep learning curve as well, and that's super. And again, that willingness to engage is the most important thing. I really think it is a case of the unknown unknowns of where the WDI survey can be particularly useful for companies. That's definitely what we hear from responders. That's sort of the biggest benefit every year, is companies working through the questions and not realizing what they didn't know, which is always really interesting. That said, though, I mean, Clémence has absolutely touched on this already. The survey does ask for very detailed information, and it will always go beyond any legislation out there. And Charlotte, as well, you mentioned that the ISSB is intended to be a sort of fundamental level of information, not answering everyone's questions. So the survey will always be more detailed than the legislation that is brought in, and that's what it's designed to do.
Thanks so much, Rosie. Aakash, I'm going to hand over to you now, as you can provide a slightly more zoomed out perspective, given your role looking at multiple different frameworks. Could you provide us with a bit more of an insight into how Nossa Data is addressing the reporting landscape?
Yeah, sure. And thanks, Charlotte, and thanks for having me here today. So I mean, we're talking a lot about the way that we're looking to get insights and metrics from companies. And I think where we really start from first is that beyond the companies that we're trying to get more data from, there are companies that would actually like to report more, but are held back from it for a variety of reasons. Those reasons can include platform fatigue, issues in resource constraints, unstructured data. Even when you have a lot of resources, are you able to actually find it across an organization? So we really focus on using our tech platform to make it easier to get that data collection, align data across different frameworks, figure out your reporting requirements. And so we do this across a lot of different reports. Obviously, the WDI is one that we've been working with now for 3 years. But then we're also doing this for the ESRS, the ISSB S1 and S2, GRI, and about 30 plus other different frameworks and standards where we think we can help with that data collection process. And then also, yeah, it's just once you've done it already, we think too many companies are kind of recreating the wheel each time. So how did you respond last time? Which team owned the process? Ultimately, it should be faster each year as you're doing it. You shouldn't have to kind of recreate a lot of what you're collecting, especially for some of the narrative-based questions or things around your policy. And then if you're doing that, then when we're at the point where more things are being requested and an investor is saying, okay, we do need more of these metrics on your S, then you should ideally not see it as a full task to kind of go back and do everything all again. You're just adding the additional topics that are considered material. So we really just try to help as much as we can across all the different frameworks that people are working with.
Great, thank you so much. I'm now going to move on to look at how social issues can build on the work done in disclosure on other topics. So yeah, we are not at the start of the kind of journey of companies disclosing this information. Environmental information in particular has been disclosed much more extensively for much longer. So I'm going to go back to you, Aakash, and what do you think the S of ESG has learned from the E?
Yeah, I think it's mostly just tying that conversation from what is considered the S and where that data is held, and getting who an quote unquote S professional is into the ESG investment conversation. So I think if we're looking at environmental data, for a long time we've seen sustainable finance teams who are focused on the E, and they're working very closely with financial reporting teams, they're working with investor relations teams. We've seen that for quite a while. What's kind of promising now that I'm seeing more of is that we're seeing a lot more people from HR teams, talent teams, people teams being directly involved in not just providing data because they're requested at it at some point, or because someone kind of at a senior level has requested some data, but we're seeing them more and more fully owning reporting processes. I think the WDI is a great example of that. It's very normal to see HR directors kind of working on disclosures and owning full WDI processes. We're seeing that as well as we're helping companies with the S, the ESRS. So I think really just right now we're getting a lot more people within these roles really getting a seat at the table. And I think this is translated more, as I've seen it kind of in conversations that I have had with people in the investment circles. So I used to work in asset management, and now I'm starting to see that more of them are kind of trying to convey that message around, you know, what can actually happen as a result of not monitoring S within your ESG investment philosophy. I think in general as well, people within the S communities have kind of been a bit more proactive, and we've seen, you know, even the WDI issued the letter to the IFRS and publicly kind of shared it as well. And so I think a lot of that is really just helping push S topics more proactively and showing that it is linked and kind of as important as the E, as they're all kind of interlinked.
Thanks so much, Aakash. Always delighted to hear of some promoting of WDI's ISSB position. So I'll take advantage of this to do a shameless plug. But that was really interesting, and I completely agree that having someone who can really champion and drive disclosures internally is key to being able to report successfully. And yeah, as you said, that's something we've definitely seen in the WDI. So now moving on to you, Clémence, are there any lessons you think that social issues can take from environmental disclosures? And are there any differences between the two areas that you think maybe make parallels slightly more challenging?
Yeah, I mean, I think on environmental disclosures, we have managed to create metrics and targets that can be widely applied and understood. And they have been widely agreed upon now. And they, for by stakeholders at least, who understand scientific rigor or the quantitative analysis. The S in ESG is less quantitative. For example, just because you've got a policy to comply with the Modern Slavery Act, it doesn't mean that on the ground you have prevented modern slavery. And even when you do on the ground audits, this can also yield falsified data if workers are intimidated to give certain responses. I think with climate as well, where we can sort of almost clinically look at it. When it comes to data about people, it is about people and what it is like for them. And I think when it comes to what to agree upon, I think it can be very politicized as well. Different, ask somebody what, what their moral compass across the world is not. We're not following the same one, although we do have things like UN Convention on Human Rights and things like that. But what we also have to be careful of, which is what's definitely been created a lot on environmental data, is this glunk of social metrics. We don't want that, which are so clinical that we really forget about that in the end, this is all about people and helping people and saving people. I always say with climate change, it's not about saving the planet. The planet doesn't need us. It doesn't care about us. It's about saving ourselves.
Thanks, Clémence. Yeah, I think that that's great, and I completely agree. It's really important to sort of think about why these issues are meaningful and where the impact is actually going to be. And as you said, the planet will be completely fine. There just won't be any of us on it. I think that lines us up perfectly to move on to you, Rosie. So obviously from leading company engagements at WGI and previously at CDP, you have a really interesting perspective on the challenges and successes of reporting for both topics. So what lessons do you think that S can take from the E?
Thanks, Charlotte. That's very kind of you to have a unique perspective. That's very kind. But no, absolutely, I agree with absolutely everything Clémence and Aakash have said. But fundamentally, Clémence, yeah, you're absolutely right. Social data is always going to be more personal and difficult than greenhouse gas emissions. That's always going to be the case. But I don't think that's not to say there aren't similarities. CDP started, I think 25 years ago. I think it was literally in the year 2000 that they sent their first survey. So 23 years, nearly 25. And it was sort of one sheet of paper that they posted to the companies. And there was by no means any consensus about what they should be asking in that survey and what the metrics were. And obviously now, 23 years later, that's completely different, and they've really managed to establish best practice. So I think there will be this time of of slight tension where we're trying to establish what best practice is and what the best form of sort of standardization is. But we've seen that it does happen and it does work, and it does lead to some clear metrics for everyone to be looking at. So I think, yeah, absolutely, we all appreciate standardization is helpful, but for us to achieve that, absolutely, again, I think we'll all agree with this. I don't think this is at all in any way controversial, but transparency really is the first step towards that. Until we have everyone's sort of version of a data point out there, we're not going to be able to decide what the best version is. And I think all parties, all stakeholders, investors, companies, everyone looking at the data just needs to be sort of very honest about what they do and don't know about any given topic, and what they're looking for within it as well. So I think it really is true that the old adage of what gets measured gets managed, just to be very cliched about it. I think that really, really is true and has been very clearly demonstrated by CDP and the greenhouse gas reporting sphere. But I do think absolutely there needs to be an element of reporting companies in particular acknowledging that they don't know everything about their own organization, which is, to some extent understandable at this stage. We're talking to massive global organizations who haven't yet necessarily rolled out the extremely expensive and extensive data collection systems that they need internally. That definitely is improving, absolutely. And even in the time I've been with the WGI, so this is my fifth cycle with the WGI, I think even it's been a clear improvement from when I first started to now, as in how many companies have their own data collection systems that straddle the whole company. And with that, I think they have to be open to learning from the data that they collect. just as they had to be about the early days in climate change as well. They have to be open to learning about that. Yeah, so thanks, Charlotte.
No, thank you very much, Rosie. Yeah, it's really great to hear there are lots of opportunities to build on the lessons of climate disclosures. But ultimately, one of the major challenges to building effective disclosure frameworks can be the fact that different actors involved in reporting can want quite different or sometimes seemingly opposite things. So we often see in the WDI, for example, that investors are more interested in quantitative data and are maybe not particularly keen on hundreds and hundreds of words of narrative from companies, whereas companies quite like to be able to provide context to their answers, and those kind of qualitative questions are really important to them. And similarly, civil society organisations often want to push for the most ambitious disclosures, whereas other actors would maybe prioritise getting a higher volume of more basic data. So turning to you first, Aakash, how do you think we can get these different groups of companies, investors and civil society working more collaboratively on reporting?
Yeah, thanks. So I think standardization is an obvious one, and we touched on that a bit today, but I think one thing that maybe gets under highlighted is alignment. So I know we talk a lot about, in the ESG space, getting ESG reporting or workforce reporting up to the standards of financial reporting. But having worked in finance, I think sometimes we take the wrong things, or we've maybe kind of taken the wrong things from financial services with respect to how we operate. We've taken on all the jargon and the acronyms and the barriers to entry. But then when it comes to alignment, in financial services, your net income directly flows into your cash flow statement, and that directly flows into your retained earnings on your balance sheet. You don't recreate a methodology every time you report a new financial statement. So I know obviously we've talked already about the different kind of qualitative versus qualitative aspect of social reporting, but I think we just need to do a bit more in terms of alignment and making it easier to report on multiple things for different stakeholders. Even if things are slightly reworded, I think we do also want data to get to the level of auditing requirements across ESG reporting. And so even if there are slight edits, that requires new auditing processes to go into place. So I do think, it's being talked about more, especially with the workings of the ESRS and ISSB and the organizations around them kind of contributing to consultations, putting out statements, helping with alignment. But yeah, I think there's just a bit more to do with that, so that we're not, again, recreating the wheel each time. In terms of collaboration, it's likely that some HR teams are responsible for reporting certain metrics that an ESG team is looking to separately. And I think if we just make it so that those things are naturally kind of known that they talk to each other, and not just kind of loosely, but exact wordings almost, then we'll have kind of more reporting going out without people having to recreate full methodologies of reports each time.
Great, thanks so much, Aakash. I think, yeah, we can all absolutely agree that supporting alignments as much as possible and really pushing for that interoperability between reporting systems is absolutely key. Fortunately, it does seem like we are slowly moving in that direction. So the European Commission, EFRAG and the ISSB have just confirmed, I think last week or the week before, that there is a high degree of alignment between the ISSB and the EU's climate reporting standards. So hopefully we will see the same sort of thing on social disclosures when they're developed as well. So looking to you now, Rosie. So the WDI, obviously we have quite an interesting perspective here because we are a civil society organisation ourselves and we partner very regularly with other CSOs, but we do have very strong networks with both companies and investors. So do you have any words of advice to support better engagement between these three groups on standards and reporting?
Thanks, Charlotte. Yeah, I mean, absolutely. I think just to, I suppose, sort of reiterate my earlier point that people do just have to commit to being transparent. It really is the best starting place, and there's nothing wrong with being as honest as you can be, and also committing to open dialogue with any stakeholder that is interested. We need to be talking to each other. This problem is not going to be solved by any individual organisation or sphere. Everyone needs to be working together, and again, just admitting that they don't have all the answers. I think, Clémence, you mentioned at the earlier on that some companies do need to look quite hard to find modern slavery, but it is there in almost every company's value chain, and they need to be honest about that. I think it's also probably just worth noting that a good handful of our signatories have signed up to be a signatory to the WGI, to learn how to enact responsible investment and how to encourage companies to be responsible and sustainable employers. So everyone is learning, and everyone needs to be open to learning together. Again, not to sound too cliched about it. Thanks, Charlotte.
No, thank you so much, Rosie. Yeah, I think emphasizing how this is a really rapidly developing field and no one has all the answers, is really important, and that can kind of create the conditions for collaboration and support. Clémence, I wonder if you could let us know what you think the key factors in are supporting collaboration around reporting.
Yeah, I think to me, have promote a single disclosure framework. So if we can all agree who we just hang our hat onto, then it will make things a lot easier. And I think, just as Rosie said, it doesn't need to be perfect at first, like the CDP wasn't perfect 23 years ago, but now this year, so many companies are disclosing on it that the CDP is overwhelmed, that they're not releasing the scores until next year for, the 2022 year. This is the reality, a great reality, actually. And I think it's similar to accounting standards. Financial data is so much better because we have IFRS accounting standards. So we could all agree to disclose to the same thing. Then everybody knows what they're doing. And then we can always refine and improve the type of data we ask of companies, because usually things don't change that much year on year. It's then about, fine-tuning things over the year.
Right. Thanks so much, Clémence. Yeah, I think you've hit on a really important point, and I think what I've seen as being one of the major stumbling blocks to collaboration, which is making the perfect the enemy of the good in reporting. And I think that everyone, I'm definitely guilty of this, has in their head, or maybe not everyone, maybe people have a bit more of a life than I do, but has their perfect disclosure framework in their head and knows exactly what topics and what kind of materiality and what metrics and all of that they would use. But it's very easy to get hung up on that, and to forget that, like, ultimately we just need to get some disclosure that people can sort of coalesce around, and then we can build on that. So Aakash, moving to you again. So as Nossa Data aims to really streamline the reporting process, I think you must be incredibly familiar with the many pain points companies face when it comes to reporting. At the WDI, we definitely regularly hear from companies that resource constraints can play a significant part in their ability to disclose, particularly as frameworks have proliferated and companies are expected to report more and more. So how should companies focus their time and limited resources in the face of so many information requests?
Yeah, thanks for that. And this is kind of our bread and butter. We like to show that we have ESG expertise, but the majority of what we're doing is helping companies basically avoid duplicative processes and figure out how to handle the resources they do have. Some of that is in the alignment that I mentioned. So it's helping companies align data across different frameworks where it might not be exactly the same, or where it might be exactly the same. You can pull in the same data. It's helping perform gap analyses on these types of things so that you can see, okay, if we're looking out to, maybe we don't have to report to the ESRS for another 2 years. If we're looking at our gaps, how short are we from actually meeting our mandatory requirements based on what our materiality is? And then assessing that as early as possible to see how much you can respond to. And it could be the case that you get a new questionnaire or you get some kind of pressure to respond to something and you already have the data. So try and get as much credit for what you do have. And what I think is also really interesting is that we hear about the resource constraint and the resource issue really across the market cap spectrum. So we talk to large companies that think that it's more of a small company problem, or small companies that think it's more of a large company problem. But for smaller companies, we'll see that they might not have enough of a large team or limited resources directly to handle a particular task. And then for a large company, it's just that they have a massive team, or they have lots of teams, and the data is really disorganized or unstructured, and it's across a greater space of different people who've owned the task. So I think it's really just about helping companies isolate where those data points are located, and then making it as easy as possible for companies to take the data and put it into the reportable way that they need to get to respond to as many of the different disclosures that they're being expected to respond to.
Thanks so much, Aakash. Rosie, you are very much at the coalface of supporting companies through the reporting journey. Do you have any top tips for organisations when it comes to prioritising and balancing resources given these different information requests?
Thanks, Charlotte. You know, I definitely do have some thoughts on that. I just very quickly just want to reiterate how fab the Nossa Data platform is. It's always one of the sort of biggest bits of positive feedback we get each year from the responders is how user-friendly and straightforward and useful the platform is. So again, if there's anyone online who hasn't yet had a look at it, I would absolutely recommend it. It makes everyone's lives 10 times easier. Yeah, so but in terms of sort of top tips, one, yes, use the Nossa Data platform. But in terms of the legislation angle as well, we definitely see it as a really useful and important driver for sort of pushing forward awareness of any issue. That's always really helpful for when legislation sort of shines a light on any topic, and for as well getting a basic level of information out of stakeholders. But for change to be really impactful, that we do need to be providing much more detail, as we've already mentioned. The devil is always going to be on the detail for this kind of thing. So companies do really need to be able to go beyond what legislation is currently asking for and probably will ever ask for. So I think, and that's obviously, and I am going to say this, but I do fundamentally and truly believe it, that's where voluntary initiatives like WDI do come in, because they provide a really good framework for allowing companies to shape their reporting, as we mentioned, learn what they don't know, and learn what data points various stakeholders are interested in. So I suppose in summary, and again, this is not gonna be revolutionary or sort of be groundbreaking to anyone, but I do think it really is just a question of getting started and trying to be as prepared as possible. And as I think, again, we've all mentioned, it doesn't need to be perfect right now, and that's totally fine.
Thanks so much, Rosie. Obviously, I'm also very biased, but I do completely agree that companies will need to go above and beyond. I am continually really wowed by the level of detail and comprehensiveness investors want to see from disclosures, and that kind of detail just won't be available in mandatory frameworks. They are, as the ISSB likes to say, a great baseline and a great starting point. But yeah, it's likely they're going to be able to cater to the huge amount of kind of different priorities and levels of ambition that the investment community has when it comes to sustainability as well. So on that, Clémence, moving to you, are there any factors that you think will be particularly useful in helping companies to streamline their reporting efforts in the light of all of these requests?
I think there is an emergence of best practice when it comes to environmental disclosures, because as you've just said, right, you can have the ISSB or you can have the TCFD standards, but the way the data is presented, the way things are disclosed isn't always great. Some are better than others at doing it. So I think we're seeing emergence of best practice. I think to mind comes probably this side of the pond is probably better than our US counterparts. And we certainly then need the same thing for workforce related disclosures, but I think we can't only rely on good sportsmanship. I think it's good to have some good sportsmanship for a while, but then it needs to be mandatory. We need to be very clear as to what we need, why we need it, and yes, and things are always, not all questions will be answered because new problems emerge. But sometimes if proper regulation or proper rules are put in place, and it doesn't become a problem anymore. So I think it is, we never quite get to that cycle nowadays because very little regulation gets put in place, I think, when it comes to issues like the opioid crisis in America, for example. But I think if proper rules are enforced and standards are enforced, then these things then can get dropped because the problem can get solved through wider rules, and everybody has to keep to them.
Yeah, absolutely. Thanks so much, Clémence. So I'm now going to move on to our final question, which where we're looking more to the future. And Clémence, I'm going to stay with you. So I'd love to hear what you think the future of workforce reporting looks like.
I think leveraging technology as much as possible. The financial system still runs on Excel spreadsheets, which is mind-blowing that it does. So I think if we can leverage technology better, and if we can try and facilitate reporting using proxy measures, because we can't always have on the ground stuff and data, it might already alert us to there might be a problem on the ground. So I think using proxy measures and then really leveraging technology to the max, so most things are automated, easy to collect, and easy evaluated.
Great, thanks so much, Clémence. Yeah, I completely agree. I think technology poses huge opportunities for massively improving the scale and efficiency of reporting. Aakash, as someone whose organisation is trying to do exactly that, I will hand over to you now. What do you think the future of workforce reporting is?
Yeah, thank you. And just because you said this last question, I'll say thanks, Rosie, for shouting us out a couple of times there. But yeah, I think S topics and workforce topics have been highlighted, especially after the pandemic. We've seen a direct impact of where issues around health and safety and workforce disclosure can actually have an impact on the future of a company or their opportunity or risks. So with that, I see no reason why we won't see a bit more of an emphasis or something like the WDI potentially matching that CDP level growth. More around kind of the tech example, I fully agree with all of that. Nossa Data is looking to become that norm because we believe that technology will become part of that norm. So I know we say it, right, finance maybe is using a lot of Excel spreadsheets still, but investors still have a Bloomberg terminal or a FactSet terminal. They have some sort of thing that's there to help them assess all the varied, unscattered or scattered data sources that are around there. Salespeople have CRMs. There are ways that we can maybe just have dashboards and things that people can use to better assess what data they have, what they've done in the past, look at what their peers are doing. Typically, it's another thing that people do with financial services. They'll assess how one company is doing against another with kind of standardized data points. So I think as we see more standardization, as we see more alignment, we'll see tech be able to be even more helpful with all of that. And then we'll see more of these kind of designated teams who own each report year over year. We'll see consistent reporting methodologies within companies where they're not kind of deciding how they want to calculate something year over year again. And again, I fully agree. I think technology can help with that.
Great, thanks so much, Aakash. Yeah, it's really exciting to think about all the ways you can smooth out the reporting process. And finally, I will hand over to you, Rosie. What do you think the future of reporting looks like?
Thanks, Charlotte. Yeah, again, absolutely agree with everything Aakash and Clémence have said. And I think I've sort of as well also sort of mentioned that just in the time I've been at the WGI, that companies are rolling out very sort of costly HR data systems to collect things. So I think that will be absolutely really crucial for the kind of data we're asking for. Absolutely the kind of alignment and collaboration that we're all working on, that the Nossa Data platform is trying to promote is super important. So I think I hope there will be an increased willingness to collaborate as much as possible on as many different aspects of this field as possible. And I do hope as well that there will be a growing sort of comfortableness, that sort of word, but it should be from organizations from companies on the fact that some data points they traditionally have felt they've been a bit reticent on reporting. So things around modern slavery we've mentioned, or turnover rates, etc. That aspect of things we do find is a big sticking point for the companies in the survey. But I hope that there will be an increasing level of acknowledgement from the companies that they need to be reporting these data points to make sure that, as we said, the data is out there and it can be scrutinized, but also they can learn from each other. And that level of transparency is really important. And again, we've mentioned this, but the fact that investors are acknowledging that things are not perfect, and I think that will continue to grow as well. So I feel quite positive about the future. I think people are becoming more comfortable with these topics. Fingers crossed it continues and is really impactful.
Thank you so much, Rosie. What a lovely positive note to end our panel on. So we now have some time for Q&A. So if anyone has any questions, please do pop them in the Q&A function or in the chat box, and we'll get to them. We've had a couple of questions come through while we've been speaking. So the first is, I think, probably makes most sense for you, Rosie, but obviously if anyone has any thoughts, please don't hesitate to jump into. This is so if a company is new to workforce reporting, where should they start?
Thanks, Charlotte. Yes, absolutely. So again, not to be too sort of one-minded about this, one-track mind about this, but absolutely the WGI survey is going to be a good place to start, because it outlines various ways that companies can focus their time and their resources, and absolutely we do not expect companies to have every answer at this stage, but there are what we call foundation level questions in there that are a good place to start from. The name, you can probably tell, and there are also core indicators as well, which we can definitely explain in more detail, but basically are the ones that give the best insight into what a company is doing. So there are various ways of making it trying to make it as easy as possible to make that first step. It definitely is, and Aakash has mentioned this as well, like it's the first year is difficult, and then you don't need to be making more work for yourself in subsequent years. So really is the first year that's tricky. And also sort of learning from each other as well. Again, I've mentioned this elsewhere, so I don't want to repeat myself too much, but lots of companies are trying their best, and there are lots of case studies and examples and data out there about what companies are doing. So again, Aakash has said it, don't reinvent the wheel, just look around and find some best practice. We do have a good practice guide that's available in the Nossa Data platform or online, for people to see what companies are doing through the WGI survey. And I think that's probably enough plugging for me. Thank you, Charlotte. I don't know if anyone else wants to add anything to that.
Yeah, I'll just say, I mean, even if you're not going to submit or respond to something like the WDI right now, it's worth having a look. You know, usually in order to properly prepare for something and actually report to a standard, it takes, you know, a year of figuring out whether you can get the data, if you have it for that fiscal year, if it aligns with everything else that you're doing operationally. And so it's really important to just look at what your gaps are, and if you can respond to something, I think that'll ultimately make you more likely to be able to respond to these data points. But if you kind of wait for an investor to come knocking at your door saying you have to respond to this, if you wait for the regulation to kick in Europe and then start on that day, you're likely going to be massively behind and not be able to respond to things appropriately. So at a bare minimum, just have a look and assess some of the gaps.
Great, thanks so much, everyone. And Aakash, you've timed it like perfectly for another question that's come through, which is sort of what are your plans for Nossa Data going forwards, and also how can companies use Nossa Data in their reporting sort of more broadly, beyond WDI? Yeah,
I mean, so what we do for the WDI is very similar to what we do for all frameworks, all standards, anything that really requires you to collect data. So what we've really done is actually built a lot of the platform around what we got from direct feedback from users from the WDI. So early on, the WDI was really the key framework that we were just trying to make the data collection easy for. And now we do that across a variety of different reports, and we have a lot of accreditations as well. So we're SASB, ISSB, S1, S2 accredited, CDP, GRI. We have partnerships across the board with different ratings groups as well. So we look to just see what each company really needs to solve first. And that's usually just the first way to help kind of automate certain processes. And then there are a lot of different things we can do around peer benchmarking, allowing companies to see relevant data points that their competitors are responding to or that peers are responding to, see how their annual reporting or their sustainability reporting is matching up in terms of where they'd like to see the materiality across the board. And then for things like ESRS or GRI, where some companies have kind of indicated they want to respond in the future, we'll always enable gap analyses where you can just see, okay, do we have this data yet? Are we missing it? How much of it do we have? Would we be able to respond if we had to respond to it today? So a lot of it is just solving, a lot of these problems. And if we look what the problems are, it's survey fatigue, it's not understanding how rating agencies, how best to connect with them. It's trying to figure out who owns different processes internally. And again, we do that across a variety of different reports. And I think we're well over 30 now at this point. So if there is a framework or a rating agency that you are working with that you would like a bit of help with, there's a very good chance that we do support it.
Fab. Thank you so much. So just a couple more that have come through. Do pop any questions you have in the chat or in the Q&A function. So one for you, Clémence, which is just about investors' priority social disclosures. I know you already talked about modern slavery. Are there any particular data points that you're really interested in, or any other topics that are, kind of front of your agenda?
I'm going to have to defer that question, but no, I can talk a little bit about it. I think if you want to know more about it, I have to guide you to our website, where we're reporting every year on our modern slavery project as to what we're looking for exactly. But I know that my colleague Martin Bossel, who's our Better Work lead, is the one heading this up, and I think he's looking at all sorts of issues. But yeah, in terms of the modern slavery, I think we're currently looking at trying to identify, compliance with the Modern Slavery Act and things like that, but then also trying to score companies as to like how much, where they're not giving us enough information, and then trying to see how we can improve that and create better data and better information as to what's happening.
Fab, thanks so much, Clémence. And then just our last question, which is about how the WGI is feeding into ISSB, which I can take, but then Rosie, if you have anything else to add. So we are, obviously very enthusiastic about ensuring that the mandatory reporting at the ISSB is rigorous and provides investors with the data that they need. And to support that, we are doing quite a few things. So we've got a number of resources for investors to be able to participate. And some of them might be helpful for companies as well. So the first is a model consultation response, which is designed to provide answers to kind of most of the questions in the RFI, and you can either take it and submit it verbatim if you wanted to, or you can use it as sort of inspiration and chop and change and add bits in as you see fit. It can be, speaking as someone who spends quite a lot of her time doing consultations, it can be very nice to not start from a blank page. So hopefully that's useful. We do also have a draft investor letter that investors can sign onto to signal their support for human capital and human rights disclosures at the ISSB as a priority. Obviously it's a really key area, and there's a lot going on at the ISSB, and this is a really great way of, and hopefully a really impactful way of demonstrating that sort of strength of investor support for social disclosures. And lastly, we will of course be doing our own submission to the consultation response as well. So lots going on in that area. Great. So I don't think we've had any other questions come through. I'd like to say a massive thank you to all of our panelists who've been absolutely fabulous. I thought it's been a really, really interesting discussion, and I've really appreciated it. Thank you so much to our audience as well. Obviously, if you have any questions about any of the things that we've discussed, please do pop us an email and get in touch. Obviously, always happy to speak to you. And we finished just 5 minutes too, so you can, hopefully that's a nice time for everyone to go and make a cup of coffee and have a break before whatever it is you're going to do next. So thanks so much, everyone. Thank you. Have a fabulous day. Cheers. Bye.